Hello everybody and welcome back to the channel. My name is Smart Money Mo, and in today's video we're going to be doing a simple SMC entry model breakdown and guide. I'm going to be breaking down this guide with a beautiful trade that I sent out on USD CHF to the team. So let's quickly talk about this trade. So this trade was sent out to the team yesterday, so on January the 3rd, and it hit today on January the 4th. It was a great way to start the year. It ran for 4 hours and 40 pips. And yeah, you guys can see that I sent it here. I sent the very clean potential entry for tomorrow. You can see the entry zone here and the analysis. And then you can see the after results are here. Price tapped in and dropped. So if you guys are looking to take entries alongside me, if you're looking to see my analysis, you're looking to learn the way I trade, if you guys are looking for all these good things that are listed here, make sure to check out first link in the description for my mentorship. And yeah, I'll see you guys there. But without further ado, let's get right into today's video. Alright everyone, so let's get straight into the action with step 1 here. And this system is literally only a 2-step system because it's a lot less complex. It's more of a simple system and it's very easy to implement. So yeah, starting off with step 1 is wait for price to give you a higher time frame bias. Okay, and what I mean by that is I have 2 examples here, right? So we've got our 4-hour level of supply, and we've got our 4-hour break of structure, right? These are the 2 sorts of higher time frame biases that I mainly use for this model. Okay, so right here we have our 4-hour supply. Price, taps into it right now on the 4-hour. So I know for the next coming days, price will move towards the downside, right? Or expect for price to move towards the downside. And yeah, that is essentially what I mean by high time frame bias, because all a high time frame bias is sort of direction that you think price is going to head to for the next day, or for today, or the next couple of days, or the next week, for example. Okay, so that's the first way, right? Through a higher time frame supply zone. And the next way is through a higher time frame break structure. And guys, when I say higher time frame, I just mean anything above the hourly. Okay, it doesn't have to be the daily, it doesn't have to be the weekly or anything like that. Anything above the hourly. So 2 hours, 3 hours, 4 hours, 1 hour, can run sometimes. Usually I would use the 4-hour, maybe the daily. Okay, so we just had this break of structure here on the 4-hour, and we know that after break of structure on a higher time frame, we're usually going to expect retracement towards the downside on the lower time frames. Okay, and the reason for this is probably to fill out any imbalances on the higher time frame, come down to any demand zones on the higher time frame. Because price is quite overbought, we need to head towards this trend line that we've got over here. So there's many reasons for price to drop for a little bit and then make its way back towards the upside. For this next couple of days, we can assume that price will be bearish. Okay, so yeah, these are the 2 things that I usually look for to give me my higher time frame biases. Now we can move on to step 2, and I will quickly switch to this. And step 2 is to wait to see order flow in the direction, right, on the lower time frame, and then you enter. So what I mean by this is, so after we see all of this good stuff on the 4-hour, we instantly go down to a lower time frame, and I mean like a 5-minute, 1 minute, 3 minute, 10 minute, something like that, sometimes 15 minute. Okay, but usually you want to go with 10 minute and below, right? And what you want to do is you want to wait for price to tap into the zone, do the break of structure, and you want to wait for a consistent level of order flow to be shown in your direction. So let's just say after this point here, price has tapped into the zone, right? So now what we want to see is for price to first of all give us a break of structure, right? So the first thing that we look for when we're looking at order flow, we're looking for a BOS right here. And then after our BOS, we have a mitigation of a supply. Then we see another BOS. And then we see another mitigation of the supply, right? After we have 2 mitigations and 2 break structures, we can say that we now have consistent order flow. And in this scenario, it would be consistent bearish order flow. Okay? And then after that, because we've now established that there's order flow present in this market and it's going towards the downside, we can wait for the 3rd tap into the order block, right? So for example, we have order block 1, order block 2, and now we have order block 3. On this third one, we can now enter and take shorts towards the downside, right? And it's as simple as this. And yeah, this is a very, very simple entry model. I'm now going to show you guys how I did use this on USDCHF, which was a banging trade on 5RRs. So yeah, let's head to the real life charts. Alright guys, here I am on the daily time frame on USDCHF. I'm going to start off this time frame on the daily, and I'm going to be talking about, first of all, step 1, which is the higher time frame bias. And on USDCHF, I went for a bit of an unusual higher time frame bias, and that is in a hidden OB. Right, so on the daily time frame, we have this hidden order block right here, and that is from wick to wick right there. And I'm just essentially waiting for price to tap in, show me the reaction, and then I'll judge price based off of that, right? And I had actually already seen the reaction, so I saw that price came in and basically just wicked above it and basically respected it, right? Because on the higher time frame, if price only creates wicks above your level, it's not that bad, right? Price is still hasn't closed any candles above this level. This order block is still being respected. And yeah, like I said, this was a hidden OB on the daily. It doesn't really matter if it looks mitigated on the other time frames, as long as it's respected on the daily. That's all we're looking for, right? So now that I literally have my higher time frame bias, I can switch on to, you know, a lower time frame, for example, the 15-minute, and I can start to observe the price action that we're being given. So the first thing is that when price had tapped in, you know, it had made a high and then made a new high just slightly above the zone, right? And after this point, I was, you know, you'd expect to see bearishness if price was going to respect this zone. And what do we have here? So if I move to like the 3-minute, first things first is we have a break of structure here, right? So price creates a high, creates a low, high, and then it creates a new low lower than this low. So that's our first break of structure right here. And then following that, price mitigates a zone. And I usually represent my order flow with these little pink marks. Okay, so that's break of structure 1, order mitigation 1. We do even have a minor mitigation of supply over here, but I won't even count that, just to stay on the safer side. Okay, so that's if you want to say mitigation 1. Then we have a couple of, you know, sort of internal mitigations within this range, but then price prints out a new low down here, which is lower than these two lows. Okay, so we have another break of structure here, and then price mitigates this zone. Again, we have a wick above our zone. Price doesn't close any candles above this level, so we can just count this as another point of mitigation. Now, to stay on the even safer side, I waited for one more confirmation, which is another break of structure here, and then we have another point of mitigation. You know, you can have right here, or you can have this zone right here, which price mitigates as well. So we are right now in a clear point of bearish order flow, right? So we have mitigations all around, and we have breaker structures towards the downside, right? And now I was essentially just waiting for my entry to come into play. So I was waiting for price to do its thing. And then after I saw this is where I saw my potential entry. So I noticed that we had accumulated some highs over here. And then price comes in, takes them out, right? It comes, it takes out these highs, and then it leaves us with a lovely zone right here. Now, this zone is an extremely valid zone, as you will come to see. Yeah, let's just go through this zone now. So first things first is we have a break of structure of these lows over here. Break of structure. And we also have a liquidity sweep as well. We also have our level of inducement right below the zone, which I'll quickly make nicer right there. So we have got our inducement, liquidity sweep, breaker structure, and there is no mitigation for this zone. Well positioned in our range, no order blocks above it that we need to mitigate, and we have our bearish order flow. So these are all the key pointers that I need to tell me whether a zone is valid or not, and we have met all of our necessary requirements. Now, the entry comes in sometime later, So we'll just quickly switch to the 5-minute and we'll play out price. So yeah, price does take a while for it to come back to the zone. Just move this along, and then we'll play price. Okay, cool. So here we tap in, and now we can make our adjustments for TP, and it was very clear TP right here, which is our 3 equal lows right here. Very nice level to target. Yeah, there's not much really to it for the TP. It was just a triple bottom, and then boom, price hits, take profit. Okay guys, this was a simple 2-step method that you guys can use going forward for 2024. It's a very simple method. It's got a lot of confirmation because, like I said, we're waiting for literally bearish order flow to occur before gaining in on any entries. We're not entering in on the first change of character and enter, although you could have done that. We're not, entering straight off of the zone from this daily hidden zone. We're waiting for bearish order flow to occur, and then we're entering. But yeah, hopefully you guys all found this video educational. If it does, then let me know in the comments below. If you are looking to learn a lot more and you're looking forward to seeing my 2024 course updates, then make sure to check the first link in the description for my mentorship. But yeah guys, thank you very much for watching, and I will see you in the next one.